morning, good afternoon, good night. My name is Mike. I am the Crypto Liberal. Thanks for joining me today. So if you follow me on crypto Twitter, and if you watched yesterday's video, you might have heard that I got the vid, but that's not going to stop me from making videos. No, the vid won't stop me from making videos for you. But feeling okay. I'm vaccinated, so not that bad. Just kind of chills and achy, and that's it. So I had a sore throat, but I'm doing fine. So doing okay. Anyway, so today wasn't a good day in the market, right? Crypto went down, the stock market went down after initially staying up. So let's let's go to the chart, and I apologize if I sound like crap or if I cough here, but so the chart, right? Not good, and I pointed this out on Twitter. So follow me on Twitter if that I give more updates there. So follow me on Twitter at crypto_liberal. I provide more updates there, and more active there than probably here. I do 1 or 2 videos a day on here. So follow me at crypto or on Twitter at crypto_liberal, and you get more of these updates about important price resistances and supports. So anyway, today, this morning I tweeted that we needed to hold that $31,300 level, that blue line there, that we finished above. I commented on that 2 days ago when we were just below it. I said if we could close above that, that'd be great, and then said we needed to hold it. And look at this. I mean, we wicked down to it yesterday perfectly, right? Right here, this candle, we wicked down to it but finished above it. And today we were playing around with it again today, and we were holding above it up until sometime this morning, and then all of a sudden we went below it. And I tweeted, well, we have a lot of time to get back above it, but if we don't get back above it, we're in trouble. And sure enough, here we went down. But the important thing is don't panic, right? We still have that resistance, or that support level below us. We haven't broken it. I still say that we're I apologize. I am so sorry. I still say we're not going to 20K. I still say we're not going to 15K. And I'm going to say this again because it's very important. If there's nothing else you hear this. Everybody in crypto Twitter and crypto YouTube is telling you that we have to go down and at least touch the 200 weekly moving average, right? Which is, I think, between 20 and 22,000 right now. I haven't even looked at it because I've heard that from so many people that on Twitter or on YouTube, like every other person I listen to says, well, we have to go down and touch that. If everybody is saying that, it is not going to happen. So that means one of 2 things is going to happen. We're not going down to that level. We're not going to go down to 22K, whatever it is, for Bitcoin. Or we're going to go down to 22K, and then everybody that says that they're going to buy there buys there, right? Because everybody says that's where you got to buy. That's where you put your buys in. And then we're going to go to 100,000 and we're going to be rich. The big money's not going to let that happen. So either we don't go down there or it goes there. Everybody buys. And then we promptly go to 14K or some just unbearable amount. So everybody that bought at 22K feels pain like you wouldn't believe, right? So my vote is that we don't go there. My opinion is we don't go there because the market is so different than it was 4 years ago or 8 years ago when that's how people are basing their judgment off of, we have to go down and touch that 200 week because we've had the past. We did 4 years ago. People are saying we did that 4 years ago, we did that 8 years ago, so we have to do it again. Well, the market is so different today. There's institutions involved that have never been involved. Michael Saylor, Tesla. There's Fidelity putting in 401ks. There's ETFs in Canada and Australia. So the market isn't even close to what it was 4 years ago. And so you can't judge what happened 4 years ago and say, well, that's what's going to happen today. Now, this is just my opinion. This is, you have to do what's right for you. This is not financial advice. But the market is so different today. You can't base what's going to happen this time on what happened 4 years ago. So my opinion is we don't go down to 22K. And my opinion is that this support line continues to hold. And I extended it out today because we've been just dancing across it for so long here. So I extended it out a little bit further today. But right now, I think we're fine until right now that line's at 27.7 and it continues to go down. So as long as we stay above 27.7 today and a little bit lower tomorrow, I think we're still okay. Now, eventually this red line is going to go down to 20K if we keep following it, right? And so I could be wrong. And I've said repeatedly, I've been wrong a million times before, especially in crypto. I'm right more often than I'm wrong, but so I could be wrong this time. Maybe we go down to 22K and everybody buys in, and then we go to 100K and everybody gets around the campfire and sings Kumbaya. Could happen. I just don't think what everybody expects is going to happen is going to happen. So just look for that support line to hold if we go down that far. The other thing I wanted to mention about the candles, right, is I think it's important. Watch today. I think it's important we don't close below the beginning of this candle a couple days ago, right here. So I don't know, what is that, about 29.4. If we can finish today about 29.4, and right now we're at 29.6, I think we're okay, and we won't go back down and touch this line. Just my opinion, right? So when we started this rally on Monday, Memorial Day, the one that I predicted, right? Go back a couple videos and see that I predicted we would rally on Monday, and we did. So we started that rally on Monday at about 29.4. So if we can finish today above 29.4 and not have an engulfing candle that totally swallows up the one from Monday, I think we might be fine and not go back down and touch that support line, that red support line I have. So that's one thing to watch out for for the end of the trading day today, is if we can finish above 29.4, maybe we can trace back up. Now, there's been some important developments in the crypto industry today that is also not helping, right? Solana. I don't know if any of you are following this, but Solana, and I've never invested in Solana, but they basically, excuse me, I'm so sorry. They basically said that block production on their mainnet halted, and they need to prepare for a restart. Now, where was I going to go? Sorry. And then here's Solana, number 9 on the coin market cap list. It's number 9 in market value, right? So I don't anticipate them staying at number 9. And this is, my channel, right? I'm a big believer in ADA and Cardano. Cardano's never been down. And so, but I think people outside the industry that aren't as familiar with things that are going on in the crypto world, they see Solana down, and it throws a big question mark over everything, and it hurts things like Cardano, not as much, but it hurts them because people are like, well, it was Terra Luna a couple weeks ago, now it's Solana. Why isn't Cardano next? Cardano isn't next. Cardano has never been down, and Solana, I don't know how many times it's been down. So look for, here's my prediction. Solana won't be in the top 10 in a month. They're gonna fall precipitously here, and they should. You should get punished for that, and they haven't been punished enough for their past sins. So I think that's coming. Just my prediction. I'm sorry for anybody out there that's invested in Solana. like I said, I've never put a penny in it. So I hope you're safe with your funds in Solana if you do have money in there, and you do what's right for you. But it's just my prediction, and I could be wrong, but I don't think they're going to be in the top 10 much longer. So today in the markets, part of the reason I think everything was falling today. So let's just look at the markets real quick. No, that's not where I wanted to go. No, here we go. So here's the markets, right? We started up in the morning and just kind of crashed down and then came back up to almost level and then went down again. But the Nasdaq, S&P, Dow were all down pretty well today. And the DXY, the DXY was up a lot today, a 0.8% move. That's a lot. That's a lot for the DXY. So keep an eye on those for tomorrow. But the reason for the stock market crash, or not crash, it wasn't really a crash, but it going from up a percent or two down to down a percent, were really two things. And to me, they don't make neither one makes sense. First, let's look at this one. Jamie Dimon. Now, Jamie Dimon shouldn't have a job, in my opinion. Go watch The Big Short. Go read The Big Short. And none of those people from 2008 that were in charge of those banks back in that time frame, 2008, 2009, should have a job today. So, I mean, he came out and said, there's a hurricane on the horizon or something. I mean, it was at a investor conference, and he basically said the U.S. economy is facing a hurricane as the Federal Reserve continues its process of normalizing interest rates. Dimon said he'd previously referred to impending challenges facing the economy as storm clouds. And, quote, he said, right now it's kind of sunny. Things are doing fine. Everyone thinks the Fed can handle this. That hurricane is right out there down the road coming our way. We don't know if it's a minor one or Superstorm Sandy or Andrew or something like that. And you got to brace yourself. So, what does that mean, right? Really, in the end, what does that mean? The fact that Jamie Dimon, who should not have a job, none of those guys that were in charge of those banks back in 2008, 2009 should have a job. They should all have been fired. That should have been a requirement of the Fed bailing them out. That none of them, the whole executive team should have gone. And I worked at, one of those banks that got money back then, and it was not a good time to be at the banks. And anyway, so to me, he shouldn't have a job. None of those guys should have had a job. But he didn't say anything. I mean, so that's one reason I think the market went down a lot today, is because of those comments. But I think the bigger reason, if you look at the timing of the market downturn, was this other factor. So forget Jamie Dimon. I don't think that's really the reason the market went down. And if people are saying that, disregard that, because he didn't say anything. I mean, there's a hurricane out there somewhere. We don't know how bad it is. And I mean, speaking in metaphorically about things that he's not an expert on. He's not an expert on macroeconomic things, any more than you are. So disregard those comments. But the bigger factor, I think, is that the manufacturing activity remains resilient in May. So if you look at the timing of the market downturn, it kind of coincided with this announcement about, or this communication about the manufacturing sector. So two readings on the U.S. manufacturing sector in May show continued growth amid investor concerns of an impending economic slowdown. The Institute for Supply Management Manufacturing PMI for May hit 561, which is up, or 56.1, which is up from 55.4 in April, and marking the 24th straight month of growth. The U.S. manufacturing PMI hit 57 in May, down from 59.2 in April. For both reports, any reading over 50 indicates expansion in the sector, while readings below 50 indicate contraction. The data wasn't all sunny, however, with the ISM's employment index showing an unexpected decline last month. Additionally, S&P's report showed business confidence falling to the lowest level since October. What does that mean? And why would that make the market go down? Um, Usually, right? Manufacturing doing well shows that the economy is doing well. And you know, we've talked about this repeatedly on the channel here, is when the whole macroeconomic environment right now is we need to get inflation under control, right? So anytime some economic news comes out that makes the economy seem stronger than normal, people, you know, the bots and people start freaking out and selling because, well, if the economy's doing well, the Fed's just going to keep raising rates and and you know, there's no end in sight. And as I've said repeatedly on the channel, when the Fed raising rates and the economic downturn are going to reduce inflation, and there is light at the end of the tunnel, there is an end in sight. And so when the manufacturing comes out stronger, people freak out, right? Because the economy is stronger, and one of those two factors that I said is going to reduce inflation isn't there. But here's the thing, I'm certainly not an expert, but here's the thing that I don't understand, right? Is if manufacturing is stronger, meaning the manufacturing sector is doing well and they're getting out the product, whatever they're making, right? The widgets that they're making, they're getting it out and making it, and they're getting stronger. But, and you know, in that little clip there, it said job growth is going down. The other, you know, GDP is going down, and the Fed is raising rates, so people are spending less. To me, the manufacturing getting stronger indicates that the supply is there, right? Manufacturing getting stronger indicates the supply is there. The demand is slowing down. So, in my rudimentary economic analysis, right, supply going up, demand going down, inflation coming down. So, I think people and bots selling off because manufacturing is strong, and that means the economy is strong. That means the Fed's going to keep raising rates because inflation is going to keep going up. I think is just kind of um, people sold just based on the news and damn the consequences. But if you dig into it a little bit, to me, supply going up, demand going down, inflation will come down, Fed won't raise rates. So I think when people have an opportunity to digest that information and think about it, I think I think they'll realize that manufacturing going up is not a bad thing. It's not going to mean that inflation is going to keep going up if demand destruction remains the same, right? The economy's slowing down. They're going to continue to raise rates. So, and that's all demand destruction. They're trying to destroy the demand for product. But if manufacturers continue to make that product, and in fact increasing that product, inflation will go down. Fed won't raise rates. So I think if people have an opportunity to think about the numbers and the consequences of those numbers, it's not as bad as people are making it out to be. So, here. So just to wrap this all up in a bow, right? I don't think the downturn today is going to continue. Just my opinion. Again, just my opinion. I think going into the rest of the end of the week here, 2 more days in the week for the stock market at least, right? I think you're going to see some green, which, and the DXY start to come down again a little bit. I think crypto will follow that trend and continue up. And I think keep an eye on this for the rest of the day. Today, can we finish above 29.4 today? And we're ticking back up. We're at 29.7 right now. If we finish above 29.4 today by the end of the day, which is, 5 o'clock my time, I don't know where it is your time. If we finish above 29.4 today, I think we're going to finish this week green. Just my opinion. And I think let's look at this real quick, because I think that is exactly where the week would finish. Like if we finished the week above 29.4, it's a green week. Yeah, look at that. I think I'm exactly right. 29. Oh, where were we? Yeah, 29.4. Look at that. So we finished 9 weeks. Like we've talked about this several times, right? On the channel. We we finished 9 weeks straight red weeks in Bitcoin. Never happened before. So if we finish below 29.4 for the week, it'll be 10 straight weeks of red candles. That is just completely unprecedented. I mean, I, I, I can't see that happening. So here's my prediction. And hey, I could be wrong. I've been wrong before, but so far on this channel, I've been pretty right, right? I've nailed the bottom so far. Doesn't mean that I still have that trend line going down, and it doesn't mean that we're not going to go below it and I'll be wrong in the end. I, every day I could be wrong, but so far I've nailed it exactly perfectly, right? Perfectly. I told you we would go up over the weekend before Tuesday, before the stock market opened on Tuesday. We did. I told you buying into Cardano, and that was true up until a few hours ago. Your return on investment in Cardano would be more than it would be in Bitcoin, and it was up until 2 hours ago when everything started dumping and Cardano went down a little bit. But I wasn't promising you, or I wasn't saying that that would be the result by today. I'm talking end of year or a year from now, 5 years from now, right? So anyway, my point is if we finish above 29.4 today, my prediction, and I could be wrong, I'm just saying I've been wrong before, but I've been right more often than not on this channel. Finish above 29.4, which is where, go back to the daily here, we will, we're at 29.7, finish above 29.4, I think we're going to finish the week green. And that means, I mean, it could be only a $300, right now it would be a $300 difference, but I think we're going to go up, and I think it will continue to go up for a few weeks at least, if we can manage to finish this week green. Just my opinion. So that's all I have today. I need to go, I don't know, lay down and take a nap. Anyway, I'm sorry my voice sucks. I'm sorry I'm coughing on video here, but I hope you got some value out of this video. If you did, give me a like, give me a subscribe, follow me on Twitter at crypto_liberal. And that's all I have for today. Stay safe, stay healthy, love and peace. My name is Mike. I am the Crypto Liberal. Thanks for joining. Ban the guns.